Hi there, welcome to The Trade. Great to have you here with us. Before we get to the charts to watch, here's what traders are keeping an eye on today. Of course, U.S. Federal Reserve Chair Jerome Powell said the economy is stronger in the U.S. now than the central bank had expected back in September when it began cutting rates. So perhaps a bit more caution going forward. French lawmakers passed a no-confidence vote against the government, throwing the EU's second biggest economic power deeper into a crisis, threatening its capacity to legislate and tame a massive budget deficit. Oil futures up as traders await an imminent OPEC Plus decision on production cuts. Also saw a larger than expected draw in U.S. crude stockpiles. So that's also supporting prices. Gold edged higher on that U.S. private payroll report, showing job creation rose at a moderate pace last month, and copper prices eased. Again, waiting for a bit more clarity when it comes to demand. Well, we have this big U.S. tariff prospect looming. Joining the conversation today, Peter Pan from ACY Securities. Peter, welcome to the program. I think it's probably fitting if we start by taking a look at the technicals behind some of these key metals that are so important to the direction of the Australian market. Should we start with copper?
Yeah, sure. So recently we have seen the copper price has dropping quite fast, especially after the Trump win the election in the start of November. However, we can also find a relationship between the gold price and the copper price. They drop down at the same pace and the same trend together. So recently, we are not only see copper goes down, we are seeing like all commodities, especially for those metal commodities, which has also get some pressure from the Chinese economy expectations. So the copper price and the gold price is mainly caused because people expected after the U.S. tariff has been to effect, the global trading volume will goes down and it will influence the consumption of commodities. So in longer term, I think it will do more pressure on all of those commodities. But in short term, we can see there is a difference between the gold price and the copper price because there is some war tension raised in Russia and Ukraine. Like Russia and Ukraine is starting to talk about how to whether or not use their like nuclear weapon to threat the opposite. And however, in the middle of November, we can also see that after Israel and Lebanon has signed the stop fire agreement, the gold price is still going down. So let's talk more about gold because I think there is more opportunities in gold trading. So we can see on the good side, people start to think Trump's like very tough tariff policy maybe is not what he really wants. Maybe it's just a negotiation strategy. So that doubt has give support to the commodity market, especially going to copper price and gold price. So in short term, it is good for gold. And the other thing is that there is many like geopolitical risks there, like Korean, like France. There is many issue. So in short term, it will give some support in gold. But from the other hand, Trump trading is still the core trend for the market is especially give pressure to the commodity market. And on the other side, the U.S. economy is good. And just as I said, Paul has just changed the attitude towards interest rate hike and also the stop fire thing. So I think there is a very big pressure on the gold price. So we will trade gold, we will short gold when it gets to a very high price like 2,660 or 2,700.
Okay. All right. So you would look to short gold until that level. Now, what we are looking at now is a look at the euro dollar and copper. So where are we drawing comparisons here, Peter?
Yeah. Although the correlation between these two these two price is not as close as gold and copper, but it's still share the same trend. Especially after Trump win the election. The reason is different. Copper is based on people's fear about trade war, a global trade war. But the euro dollar is because people has expected that after the very tough tariff policy, the U.S. long-term inflation will goes up, which drag the long-term bond yield goes up, which also drag the U.S. dollar goes up and keep the euro dollar going down. So they have the same trend, but with different reasons. However, after Trump has appointed an conservative finance minister, people have started to doubt that Trump is not that tough. Trump just used tariff as a negotiation strategy, which makes the US dollar goes down, which drag the euro dollar goes up. And more importantly is that recently has happened a lot of bad things in Europe area. Like yesterday, we have seen the France government is dismissed. We have seen the economy data from Eurozone is very bad. However, the euro dollar is not going down, but going up. So we see that the euro dollar has more like strong support in the bottom, and there is a bottom like trend there, and we will keep like long euro dollar until it get to a higher point. So for euro dollar, our starting point is 0.05, and I will keep trading to long it to till 1.06, and if it breaks that point, I will long it to 1.07. Although it won't break the long-term downside trend, but in short to medium term, like let's say till the year end, I will keep long euro dollar.
Okay, thank you. Thanks for being so forthcoming on your strategy. Now, just skipping ahead to Bitcoin, because we obviously have that 100,000 psychological level in our sights yet again after a 3% rise through the overnight period. What's your chart telling us?
Okay, so Bitcoin is completely different, like euro dollar or copper. It has just a one-side trend. It is it is influenced by the doubt of negotiation strategy, but the trend is not reversed. Especially yesterday, Trump has appointed like Paul Atkins, Paul Atkins as the chairman of SEC,
Yep.
and it changed the attitude of the market. The previous like chairman on SEC has a very strict rule on the stock market and on the cryptocurrency. He has do a lot of sue on cryptocurrency companies. However, the new chairman Paul, he supports cryptocurrency. He himself is the chairman of an organization called Token Alliance, which is a cryptocurrency organization.
Yeah.
And he's saying cryptocurrency will make United States greater than ever. So this not only gives support to Bitcoin, but also I think it will make Bitcoin break through 100K and even goes up to 110K. But trading Bitcoin is a little bit risky, so we need to use some indicators to help us. So I would recommend CCI index. When it breaks through 100, follow the trend. When it breaks down 100, we will stop trading and take profit.
Okay, there you go. Thank you for your rule of thumb when it comes to Bitcoin. Everyone's talking about it. Peter Pan from ACY Securities, thank you so much.
Thank you.
Take care. Scotty, I've known you for a while now. You a crypto bro yet?
No, but it trades beautifully from a technical perspective. So it doesn't matter what you believe in it; you can make money from it. That's how I proceed with it nowadays.
Yeah. Okay. And so that 100,000 psychological level, you reckon it's going to go up to 110?
Yeah, it's in an ascending triangle. You can see there on the chart there. At the moment, it's just coiling up, and then I expect it will go and break. And my extension of that, where the triangle began, about 112,000 is where
Okay, and is there any time frame on that, or?
Within probably the next month or so. Just depends. Like where on the daily chart, it's just calling up when the break happens. I expect it'll be pretty violent.
Wow. Okay, we will be watching that one. That is the trade for today. Stay with us. We will get some economic analysis with Phil O'Donoghue from Deutsche Bank next.